welcome to Trading Lounge and the S&P 500. I'd like to start with the daily chart, and we need to work through a few counts and then come up with strategy. So in this instance here, we're looking at this being a wave 4 here of primary degree, and then we're looking for 5 waves up as intermediate degree here, so intermediate of blue in brackets here. And then in wave 3 here, we're looking for 5 waves up here. Wave 3 normally is quite easy to understand, but in this case it's a little bit tricky, but we've labelled it 1 and 2 here, or even 2 under here regarding the spike, and 3, 4 and 5. Now wave 4 is rather small here, but I think that's okay because the guideline of alternation between wave 2 and wave 4 here is that normally wave 2 is sharp and swift, and wave 4 is complicated and sideways, or it can be the reverse of that. Wave 2 can be complicated and time consuming, and wave 4 can be simple and so on. Now, one of the things here is that from this wave 4 here, it also gets a little bit messy as well here. So, but in the first instance here, if we gave thought for a moment that this minor wave 1, 2, 3, 4, 5 here to make up intermediate wave 3 here, if that is complete, then the 38.2% retracement level is down here on this line through here. So we could say just ballpoint here at 23 here. The wave 4 of 1 lesser degree is here. So what I normally do in those cases, just to get a starting point, is look at the wave 4 low here and the 38.2% retracement. So that's something that we can look at if this wave 5 of 3 is completed here. And what I want to look at now is just that on a 4-hour chart is we've got wave 4 here as an A and a B and a C wave here, and that's all sort of fitting here. But it's also, the problem with this little move up here basically is that if we call this wave 1 here and wave 2 here, then wave 3 and 4 and 5 here, the problem with that is that this wave 4 here, this low here, overlaps wave 1 here. So, which is possible with these derivatives. So we've either got 1, 2, 3, 4 and 5 here, and then we're coming down into the 2300 here, or to the wave 4 of 1 less degree. If, however, we've got, and we'll look at this on the daily chart as well, include that, if wave 4 is here, which is kind of a better fit really, then wave 1 here, wave 2 pulling back 61.8% mark, covering the gap here, as 1 and 2 and 3, and wave 4 here, then wave 5 up here. So if that's the case, then wave 4 here, if we can just look at this low here just roughly, we can get another look at this on an intraday level here. Then the 38.2% retracement level is basically, let's just put a straight line in here, is here at 2412. So we could say 2410, couldn't we? It may move past that as well, but what we don't really want to see it doing is that, if I can just copy that for a moment, if this is the top of this structure here, then I'll just put a little red line there, and I'll just remove this here. So if this moves down up below this one here, which is 2406 roughly here, then we would have overlapping wave structures here. So if we call this wave 1 here and wave 2 here and wave 3 here, and then wave 4 came down over wave 1 here, then we would be in bearish mode at that point. Yeah, so, you know, if we call this 1 and 2 and 3 and 4 and 5 here and comes down, that's fine. But if it moves through, so this is really, this is quite significant here in terms of, you know, telling us that we're going to come down further into this space here. I mean, this is the, you know, when we looked at the the NASDAQ, basically wave 4 fits nicely here because we were looking for 5 waves up, and the NASDAQ wave moved up really quite nicely at that point. So it's quite possible for this to be here. I've been doing switch videos at the moment, redoing all those. There's going to be about a dozen of them on the daily switch process, but I see a daily switch in here as well. So basically the market's moved down through here and then moved up through here. So that bar there would be the trigger for this move here, with the stop above here, and then we can bring the stop down onto this bar here. Now, so that's one way to look at that if you wanted to like continue, moving down. If that was going to move down through here, then the stop would be above this daily bar here. We've also got an entry here on the intraday basis as well. So I'm just going to go to the 4-hour chart here. So we'll keep this in mind here. And I'll just going to save that there. It will just grey out for a moment. So when we come back to it, we can check on that tomorrow and so on. The 4-hour chart here, this is what this is the tricky bit here. I mean, this A, B, and C here is really easy for me to understand. This can be counted differently here in different ways. If we count it this particular way here, for instance, we have wave 1 and 2 here, and then wave 3 here. The wave 4 would come back into this space here, the 2410 roughly, and that could just about be finished there as such. So we can investigate this wave C here and we can get some understanding about that, but it's possible that we've got the A wave, the B wave, and the C wave finishing off into here, and we'll look at that, and then the market can move up from that point. So yeah, I mean, even if the market came down to the 2400 here, then it would pretty much tell us that we'd be going down further. But the other interesting point here to remember as well, because it's important not to get sort of too excited that you've missed something and then you make the silly things, moves, so decisions. So if it came down to here, there's good support here. It's a big whole number. We're going to get some kind of bounce off here anyway, aren't we? So, chasing it at this point here is not really the done thing. If you're in it, that's great. It gives you more options, but to chase it at this point would only see it kick back to the 2420 anyway, before moving down further through here. So really it's all about this little scenario here, and as I mentioned, this wave 4 here can be here, and this can be the A, B, and C here, a little bit small, but and then the wave 1 here, this is how I originally had it here, and wave 3 here, wave 4 here, even though it came down a lot here, then wave 5 sitting here, then it sort of sits all right at that point. So if we have a look at the NASDAQ just for a moment, because that was the market that was leading us higher. So this structure here is 1 and 2 here and wave 3 here. In the S&P it came back and overlapped wave 1 here, which is a no-no. And then we've got wave 5 here. So the only problem with this count really is not within here, because it fits within here. It's okay. It's this wave 4 coming back, overlapping that wave 1 there. So when we have a look at the NASDAQ and seeing what the NASDAQ has done, and we've seen this before, is we've got wave 1 here and wave 2 here, but the NASDAQ had this really long third wave here, and it pulled back to this point here. So I always thought that this was the correct count. So then what we decided to do, if you remember, we looked at counting moving up through here in 5 waves. That was also a little bit tricky as well. I thought it might react at the 5-8 here, but it only had wave 3, then another 5 waves up here. So really it's correcting across this particular space here as well, and I've been conservative in this scenario as well here, and I still want to stay a little bit conservative in this, because I know that the Amazons and the Googles and so on, Adobe's and so on, are basically, can push up higher. So we really need to look at this. So we know that just for the Nasdaq here, if it's sort of leading in a way, we know that the easiest way to put this is, let me just remove this here. This low here, we have to look at even if we put wave 5, wave A here or wave A here, we know that this is a corrective rally. That's what we're looking at, okay? So that means that if that's a corrective rally, then we should be breaking these lows here. So in a bit of a nutshell here, I'd need to pull this apart and do some work on it, but it would just be 1 and 2 and 3 and 4 and 5 coming down to here. So what I'm saying here is that I think that even though the markets could fall a lot deeper, let's just be a little bit careful about it. And the way that we can be careful about it is that because also too this here, if I copy this here, this could be wave 2 here, so I'll leave that there as well here, just because we could go a lot deeper here. But what I wanted to do here is just be a little bit careful, and once this 5 wave structure here is finished, then let's see, because we're going to get some sort of, we'll either get a move going up at that point, and that will be the end of it, it'll be an ABC correction, or we're going to get some sort of ABC correction here and then move down again. So what we need to do is we need to work out what's going to happen in this space here. Is it going to be corrective, and how do we get back into this, in terms of shorting and so on? So look, it looks like we've got wave 1, 2 in here, we've got wave 3 here, so there's going to be a wave 4 bounce and a wave 5. So you can still hold short in these markets, but when it gets to this point here, we'll need to be a little bit mindful at that stage there. So let's just remind ourselves of that, okay? So coming back to the S&P 500 here, in this one here, we can assume that, we have to be careful when we do that as well. So we've got 2 counts. So first of all, we could be coming down to the 2300 area here, but we have to confirm that in certain ways. And one of them, is that if we are calling this wave 1 here, then we need to see this market move down and overlap that, and more so on the cash market than the futures market here. So we need to see that on the cash market. So that's one thing, and that's not such a big deal for us, because we know that if the market comes to the 2400 here, we're going to get a bounce off here, because the time that this comes down here in 5 waves, just like I mentioned on the Nasdaq there, we're going to be looking at that. So we need to know if we're going to get a small bounce and come back down, or we're going to get a larger bounce and go back up there. So if we look at this ABC pattern here on the tick chart here where we've been looking at it, now I've got it as wave 3 up here, but as you know, we can have that as wave 5 now as well, as such. So we really need to work out sort of where we're at with this at the moment, but that's okay, we'll leave that there. But we know that we've come down to the A wave here and a B wave back up to this point. I did get that a little bit wrong in here, but it wasn't far off, and certainly we're looking down here now as well. Now in this move down through here, I've pulled this apart on smaller tick charts and so on and so on. I think that we've got a very clear wave 1 here in 5 waves, not a problem. And then wave 2 here, not a problem here either, in that one there. I was looking at this as wave 3 coming down to here, and then wave 4 coming back, but it overlaps wave 1 over here, yeah? So I'm thinking to myself, well, that's not quite fitting right. It's probably better counting it like this here, so wave 1 here, wave 2 here, then wave 1 here, an A wave, a B wave, and a C wave for wave 2 here, and then 5 waves here, 1, 2, 3, 4, and 5 here for wave 3, then wave 4, and then wave 5, which is just these 5 waves down here are pretty much completed as well. It can make another new low here a little bit, but basically from wave 4 to wave 5 here, this is on 100 ticks. If you have a look on 5 ticks, you can count it. You might need to go to 10 ticks or 20 ticks to clean it up a little bit. I had to go 5 to pull it right apart a bit. So what we can be looking for here now is that would be looking for from wave 2 to this wave 3 here. When that completes, would be looking for a 38.2% retracement level. So this is 2429, so we'll gravitate towards the closest largest number, so 2430. So it's a retest of the top of group 1 here. So what we can expect is from the 20 here to go back to the 30 and then down to the 10 here. That's where we can have this completing here as an A wave, a B wave, and a C wave. So it can end at the 2410 here. If it gets to 24, then we start seeing the overlapping wave structures. But at the same time as well, as we just mentioned before, is that we need to see, we forget wave B and wave C here. If we get 5 waves down, which we'll get 5 waves down here. Once we got the 5 waves down here, if I can just draw that over here, 1, 2, 3, 4, and 5 here. Once we get down this space here, we're going to have some sort of bounce here. So we're either going to get a bullish thing happening here, or we're going to get a corrective thing coming back up 40%, 60, 50%, but we need to work out if this is going to be corrective. If it is going to be corrective, then we need to work out a way to get back into it, onto the downside, and then basically the trade will be in some way or another from 2400 down close to 2300 here. So there's plenty of space to go, plenty of money to be made, but we just need to go step by step to get it right. We don't want to get fixed on something and then get it wrong. I also put, this is basically, we've been talking about shorting through here. So if you are short, that's great. Just expect bounces off the 20 and 30 here. The thing with, we could use this trend line here as a stop here, but the problem with that is that wave 4s tend to see the trend line broken. So when you're looking at, if you're looking at a trend line, oops, can't draw on that side, trend line through here, we would see wave 1, wave 2 here all fitting, wave 3 to come up here. Then it's common, well, it's not even common, we just expect wave 4 to break the trend line and to suck people in and then move off. So wave 4 breaks the trend line. So it may do it up high here with the wave 4 of 1 lesser degree, or it may do it out here somewhere. But that's, that's its thing. So just be mindful of that. It takes a lot of courage to stay in a trend, especially if you're over trading, which most people do on the indices and the Forex. So you get yourself into a bit of strife there. Okay, I'll leave it at that. Cheers.